Hi. Are you currently making a loss in your investment due to the recent market crash happened in the month of March? Or do you see yourself consistently making a loss in your investment and you don't know what's actually the reason leading to that? My name is Terence Ng. I'm the founder and the leaders for Buffalo Investment Agency. And today's I'd like to share with you what are the 3 most common mistakes investors make, especially during their unit trust investment. Okay. Currently, I'm managing a total assets of 160 million, and which is about overseeing 1,300 investment portfolio. And these are the 3 common mistakes we see the investors tend to make. The first would be the fund selection. Okay, doesn't tally with their financial goal, which in this case are something as a risk profile. Okay, currently in the market, there are total 39 unit trust managing company in Malaysia with more than 690 funds, for investors to choose from. There's a big range of it, and I'm quite sure that out of 690, definitely to be one fund which is most suitable for you. But the thing is, whether do you spend the time to look for it or not. Okay, when we pick a funds, often we need to look at your risk profile, and the risk profile, there are many ways to assess it. I would say the biggest aspect of it, the risk profile, relies on your time horizon. Yes, your investment time horizon. Okay, the general rule of thumbs, the general rule of thumbs, if your investment is meant for just short term, okay, you can invest just, for example, just like for 1 or 2 years, if your time horizon is short, you shouldn't go for too high risk fund. Your risk profile should be low. If your time horizon is high, meaning that money can park there for 5 years or more, mainly for retirement or education fund, then your risk tolerance is high. Very often, investors, they tend to lose money investing is their money, they can only park for short term, but they wrongly invest in the risky fund, and when the time comes, market crash, and they need to force sell their investment, realizing the loss. This is the main reason, because if you're holding power, anytime investor also you can make money. That's why always pick the fund which is most suitable for your time horizon. Okay, and the second common mistake we see people make, okay, is they just focus on specific sector investment. Okay, or in short, there's no diversification. Okay, very often, my customer ask me as well. He said, "Hey, Terence, what's actually the good fund to go in now? What's actually the best fund now? And then what's actually the flavor for the month, the hot pick?" Okay, if you always have this tendency of choosing an investment fund and look at the recent returns, you have running a risk, whereby you always go into the fund which is the fund prices at high already, and you focus all the bullets on there. It's very, very dangerous. Okay, because throughout our last 23 years experience, we never see a single fund, that can perform permanently or consistently well for a long period of time. The fund that performed well this year, chances are for next year it may not perform as good. Okay, because all the funds, they experience something what we call a sectorial or the regional rotation. Okay, if you look at this colorful chart here now, okay, we have all the boxes, each of the boxes of one color symbolizes one sector. For example, the purple color, will be the investing in the emerging market. Okay, the boxes in blue, will be investing in the small caps. Okay, imagine if you just focus your bullet just in one sector, like emerging market, the purple one, you see investment tend to be very volatile, Okay, very volatile over the years. Okay, because emerging market will do good this year, chances are next year it may be go down. You see, that's why a better way, is you construct an investment portfolio with a careful asset allocation, will cover different sectors, which in this table will be those boxes in the gray. Okay, if you invest in the the Dowsia portfolio, your return movement can be more stable. It fall within the mean line. This is actually the portfolio you want. You see your assets, or your wealth, will grow steadily and healthily over the times. Okay, never put all the eggs in one basket, as I was saying, And the third mistakes, any investor makes, and this one is a big one, by far the biggest one, which is emotion. They tend to let their emotion, to take over the steering wheel when they are running their investment. Okay, and the two big emotion here we always see, right, will be the fear and greed. Yeah, the two big one. Okay, why this can be a problem, you know? Very often my investor, after talking to us, right, we sit down, we spend 2 to 3 hours, come up with the investment plan. Okay, we can commit to it, and the plan is for long term, like for retirement or for education fund. Okay, after the plan started, no, probably in just 2 or 3 months down the road, maybe this investor, he read a particular article on the Facebook or in the newspaper, or he have a chat with the friends, right, talk about investment, no, and then he heard some negative things, right, he grow fearful, no, and he forget about his long-term plan and want to let go of the investment, or they see there are some market drop in it, then they lose confidence in that, they see. Okay, and this is actually the market, right? These people will always lose money, right, due to emotion, right? They have this tendency, you know. Okay, always have this tendency. When the market goes up, right, okay, they're okay. When the market came down a bit, you know, they are very fearful on that already. They start to sell, okay, and they want to wait for the worst to go back to go out, right, until the picture they are all clear, you know, like all the worst is over, market is show a very strong trend, right? They comes in what the higher side. They always get out when market is low and only comes back in, right, when market is more at the higher side, you see. If you are consistently doing this, right, due to the fear, right, you see a return, I tell you, it's very difficult to generate returns in long term, the investment. Okay, some people, they will driven by the greed as well. When market crash down, right, they get up. They tell themselves, I know what I'm doing, because they want to time the lowest. They want to come in when the market hit the bottom here, only they come in, you know. But the chances are, you never know when the high, when it's the low, you see. Okay, if you're doing this, right, at the end you come back in at the higher side. This is actually what happened, in fact, 2 months ago. In the month of March, if you were to exit, right, now the market, actually in April and May, right, they caught a surprising rally. Then you miss the boat, you see. Always remember this thing, you know. You look at this chart here, right, this is the long-term growth, right, for the economy. Okay, no matter how big the crisis is, you know, be it the COVID-19 now or global financial crisis, at the end, in the long history of investing, right, this crisis is just a small little glitch in the long history of investment. That's why always stay put. And always remember this thing. For the market, right, the new high is always higher than the previous high. And the new low is always higher than the previous low as well. Okay? If you want to come in, right, you think that what, well, I want to stay until the market goes back out, right? I mean, at this point, you know, you're hoping that if the level comes back to here, no? But chances are, even if it go down, right, this low, right, will not be as low as the previous low. That's why always stay invested in the market and never let a temporary event, right, to disturb your long-term financial goal. Okay, with this, right, I'm going to summarize. These are 3 common mistakes people make. The fund selection, not telling the financial goal, and they don't do any diversification, and actually they let the emotion take over the saying view, affecting the investment. 3 common mistakes. All right. If you like our video today, right, okay, please actually like our Buffalo page as well, Buffalo investment page, because over the times, right, you're going to share education video like this to teach you how to better manage your money and invest your wealth. And you can subscribe to our YouTube channel as well. With this, right, thank you, and look forward to see you in the next video. Thanks.